la famille.
Guys, I'd like to switch to another topic. Actually, last week, Nicholas, you've been interviewing someone, and I'd love to talk about this interview because you've been focusing on liquidity and exit strategy, and even when founders are not building the startup just only to be rich, but it's part of the process, still they have to bear in mind what's the logic and the mechanism behind, especially if they want to raise funds in the mind of the investors and how they expect to make a return on their investments. And maybe you could talk about that.
Yeah, so exits matter for everyone, basically. It matters for founders who really see exits as a sign of success. It matters for investors who want a return on their investment, as you said, and it matters for the entire ecosystem because exits generate liquidity, which in turn turns into wealth that can be reinvested in the next generation of startups. And so last week I had a very long conversation with a guy named Pascal Lévy-Garbois. So he's a French guy, but very interestingly, he made his entire career only in Silicon Valley. For 10 years as an operator, he was the first non-founding executive at Checker, which is a company that specialized in background checks. And on the side, he has been angel investing to this date more than 120 startups, all of them in the US except for one. So it's an interesting profile because he's French. We can totally relate to what he says. He knows the tech scene in Europe, but his entire focus as an angel investor has been in Silicon Valley. So we can really explain what's going on there. And the most important message that he shared with me, I think it really matters who you sell your startup to, whether it's another startup that's still growing or a mature tech company or an established corporate. And all these alternatives are not equal in terms of potential upside. And also it matters if you sell your startup in exchange for shares of a company that might still grow and then the price you're paid eventually turns into a much higher price later on, or in cash. And the problem we have in immature ecosystems like in Europe is that everyone really wants the cash. So for instance, if you have an early opportunity to sell your startup to a larger company, whether it's a tech company or a mature corporate, you'll be confronted with a lot of pressure from your investors, from the investors in your cap table, because they really want the cash. So they don't want you to negotiate a deal in shares. But what Pascal told me is that most of the money he's made in angel investing was made because startups he invested in were acquired by larger tech companies in exchange for shares. And then those shares went on to be worth a much higher price once the acquirer went public through an IPO. So Oussama, you basically explain the different outcomes in terms of who buys your startup. And
yes, so what I liked from this article is this thing where you say that the best thing that can happen as a startup is first to never be acquired in an IPO. And that should be your goal as an entrepreneur. You should be very ambitious. And then life comes on the way and things never work out like you think they will work out. And then you start to think about, okay, I'm never going to make it. I'm never going to be that able to be independent. What should I do? And then the exit strategy becomes the big discussion. The funny thing is that since we started the family in France in 2013, going in Eastern Europe, going in Asia, startup in South America are exactly the same. The obsession is always from every government, every tech system operator, how can we make our startup get acquired by incumbents, by big corporate that will give a little bit of cash. The funny thing is that there is two things that are big problem. First, cultural misfit. There is a very big cultural misfit. I remember one of our startups that was supposed to be acquired by a big French company. And I remember being in the meeting and having the VP of the company dividing the money they were offering by the number of months that the startup worked, and saying it's not possible to offer them that big salary. Because in the cultural view of these people working in executive, they were comparing that to their own salary as an executive of a big company after years of struggle. And they were looking these two 24 years old or 23 years old and saying, I cannot give that much of cash. And so, of course, that kind of problem, you don't have them if you get acquired by startups. So option number two is that maybe it did not work out for you as a startup, but it will work out for a startup. So if you exchange in share, merge with someone, maybe it will be a winner, it will IPO. Then if that is not an option, being acquired by a tech company still has room for growth because tech companies are growing. And then the incumbent strategy should be the last option. And I think we should not lose aside that we need more very big, large company. I was doing in backstage a joke that a 100 billion startup, it's 100 times 1 billion startup. A 10 billion startup, it's 10 unicorn. So of course, we need outside the US this kind of company. And if you look at China ecosystem, one of the things that is really not speak a lot about China ecosystem is that they have this kind of giant company that manage M&A and manage growth and are able to attract top talented entrepreneurs. It's not just that they have a lot of money for startups. They also have very big winners that work as a magnet.